Hi, welcome to this video today, which is on the 10th of November. It's Saturday. We've just been looking at some Forex pairs today. They all include the yen. Now, go to the charts a moment. We're going to be looking at USDJPY, EURJPY and CHFJPY. We've done quite a few videos on these pairs over the last few weeks. We've also covered CAD-JPY. I'm not going to cover CAD-JPY today. I'm going to cover that in a separate video on commodity currencies. Now, in relation to our view, we're bullish of the yen. Now, in terms of EURJPY, CHFJPY, we've seen a nice fall on those two pairs, just under 700 pips in profit, but far more to come in our view. Now, in USDJPY, our trade didn't work out for us. We lost 120 pips, but overall, some nice profits so far. I think USDJPY now is getting ready to turn down in a big way. EURJPY, CHFJPY, the bounce that we've seen recently, is a selling opportunity. Now we're going to go to the charts. Now, just for new viewers, we are going to basically keep our charting very simple. Okay, we're only going to focus on big levels that matter to key institutions in the market. To find those levels, we're going to use our favourite tool in Forex trading, the COT, the Commitment of Traders report. If you're unfamiliar with this tool, you can watch an explanatory video underneath this one, or just simply join our mailing list for more info. Now, in terms of just watching the video through right now, the way we use the COT, basically what we want to do is always trade with smart money commercial hedgers when their positions diverge away from speculators. Now we're going to go to the charts, but do keep in mind it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our COT analysis and our technical analysis of 14 major Forex pairs, including the ones in this video, you can get live access to our member center on the link beneath this video. Now what we're going to do is go and look at the charts. We're going to start with USDJPY first and the COT net traders positions.
Right, we're on the chart of USDJPY, so things are the right way around. I'll draw my levels in a moment. Now, just from a pure technical perspective, if I didn't know the COT, I wouldn't be particularly interested in this pair because there's not much volatility. But with the COT, knowing the data makes it more interesting. Now, before I draw my levels, I just want to draw your attention to these points on the left of why the commercials are so bearish of the dollar against the JPY. Now, you don't actually have to know the reasons why. You can, of course, just follow the COT, but we like to know what we think is their thinking, as it gives us more confidence in the trade. Now, in terms of these 3 points, point number one, Bank of Japan involved in stimulus money printing. That's been the big bearish fundamental for the yen for a good while. Biggest stimulus program ever of any country in history relative to GDP. Since our last meeting, since our last video, we've had the Bank of Japan meeting. At this recent meeting, they said no change to policy. Okay, they're carrying on with stimulus, but they're already cutting it. They're involved in what's called stealth tapering. They're supposed to buy 80 trillion in bonds per year, okay? But at present, running at just 40 trillion, and bond yields are going up, so they're already cutting stimulus. They're just not officially saying it. You can see it in the data, okay? I think, Japan is getting very close to actually saying, we will be winding down stimulus, which is hugely bullish for the yen. But doing this is already helping the yen. Okay, it's going to help it a lot more in the future. Point number two, largest creditor nation in the world, Japan, are the world's biggest savers. They hold 450 trillion in overseas investments. That money's coming home as the economy's doing a bit better. Also, you've got a bit of risk off in global markets. People not as optimistic as they were perhaps 6 months ago. While the flows coming back are not big yet, they will do if we see more risk off or big risk off, and I think that's coming. Also, overseas capitals flows will come into the yen. It's the number one safe haven currency. Okay, so in times of risk off, investors buy the yen JGBs, which are bonds, world's second biggest bond market. You're already seeing institutions put some money into them. That will increase if we get big risk off. Investor sentiment is still pretty bearish of the yen. You can see that with the speculators on the COT data. And if you take the JPY, it's oversold from fair value across numerous majors. I'm not going to go into exactly what fair value is. It's an economic model, so to speak. And of course, you can stay away from fair value for a good while. But in terms of if the yen gets moving to the upside, yeah, you're going to see a big move. Okay. Now, in terms of the chart, we know that 114 here is a key hedging level. You can see prices came up, take out the level, immediately come back through. Now, this is a weekly level that has been defended by the commercials and has basically seen the USD come back from the level for about, I think, a year and a half now. There's been about 4 attempts. You can look at the weekly chart yourself. Now, we're obviously going to attempt to take it out again. Could we? Yes, I think we could do short term, but I don't think the move will be sustained. But I just want to look at taking the yen on weakness first of all, then we'll look at taking it if it possibly rallies to the upside at a higher level. We know that's some resistance on the daily chart, obviously, a double top. Come up to level just coming off. Let's say we fall down. Where would we want to sell the USD? I would be very aggressive with my entry. Trajectory, tail, body, body, body. There's the tail. I just want it to come through that level. I want it to get through those 2 bodies there. And then I'd look to sell. Now, if you look at this purely technically, you might say, well, there's a good bit of support around here. From our perspective, just because of the size of the speculative long position, I just don't see that level holding. Of course, it might, but if I come in short, obviously we'll manage this trade each day and you can watch it in the member center. But coming short, I'll be looking for the level to give way. Okay. The first stop for me is going to be this 110 level for obvious reasons. It's where we come up here, get above it a bit, a little bit below, push off, then here, push off. Okay. So that's the first level I'll be looking for. Just from the size of the positions and my kind of, I suppose, experience of the COT over the last few decades, I personally think that would be a level to target. We literally came up here, a lot of resistance on the left, and then she breaks away. Okay, could go even lower than that long term if we get really big risk off. So you come through this level. Where would you put your stop? We want to be back behind this double top. Obviously, I personally would go back behind 115, then bring my stop down. Of course, if the USD does sell off hard. Now, in terms of what if we go higher, how would I play the trade? Well, I'd bring my entry level up. If we broke 114, I'd come in just below the 114 level outside of round number turbulence. What if we got up to 115? Well, again, I would be looking for signs of weakness to sell. If she went through the round number, I'd sell back through. Not ruling out you could get some USD strength in the short term. Just don't think it will last. Very often we do that. You put an order in to go short, let's say in this instance, then she suddenly moves away from your entry. Just adjust the entry. We're just looking for this trade. Now we're looking for a good move to the downside. Like I said, our last trade didn't work out for us, so we got stopped out. Part of the game, obviously. only a small loss. If we get what we think we're going to get out of this trade, it'll be really, really good. Now let's move to the crosses, where we've had, really good success and decent profits, and I think there's far more to come. And we're going to go to EURJPY, which at the moment is one of my favourite pairs. So let's take a look at the chart. All right, we're on the EURJPY chart. I'll draw my levels in a moment. I've already drawn one in, which I'll discuss why. But first of all, COT net traders data. There is no official data from the CFTC for the crosses, but regular viewers will know we just make it ourselves by looking at both majors that make up the cross, working out what the groups have got, and then expressing it as a simple ratio. Now, in terms of speculators, they are 2.5 to 1 in terms of their long positions over their shorts, so bullish. Commercials are 2.8 to 1 in terms of shorts over their longs, so bearish, okay? That makes a divergence for us of 5.2, which is pretty decent, and looks, well, for us, it signals there'll be continuation of the euro downtrend. Obviously a little bit of bounce there, but should be going down. Now I'll put this commercial hedge level in for a reason. 133, you very often get them in the Forex markets. They give you great risk to reward entries. Now over here, divergence was nearly 10, okay? Commercials sold heavily, speculators bought. Breaks in favour of the commercials, and we go down below the 125 level. So, 800 pip move. There was a similar divergence here. Obviously, we've come down, bounced a bit, looking for at least the 125 level on the downside. So if you look out for those commercial hedging levels, they'll give you really good risk to reward trade entries. Obviously, we've covered it in videos, but just for new viewers, we just waited for this level to hold, coming at 132.50. Off we go to the downside. We exhaust there. We put our stop behind the 20-day moving average. Normally, when we're bearish, we look for that to break, and then we'll use it, as basically a level to put our stop behind. So out at 129.50, so 300 pips. So decent profit. Now, in terms of what happened after we got stopped out, go on to the round number, 130 here. One tail through, finishes blue, but off the level. Tail goes up there, almost double tops that one, finishes red. And what you, if I draw that level in there, what you can see is pokes through that level, not being sustained. So what we decided to do is just enter back in exactly where we took ourselves out on stop at 129.50. Now, in terms of what I think might happen next week, you should get resistance here. You've got 1, 2, 3, 4 bodies. I've just drawn the trajectory in there. There you go. That's your first level of resistance. That's your second. If you want real confirmation, I'm always a bit early with my entries. If you want real confirmation that the euro has topped out, that level there. Okay, so through that body, at that tail, 20-day moving average. Okay, 20-day moving average, when it gets taken out and then prices come back to it, if we're bearish, it goes through it, that is a really good signal. Okay, so coming in fresh, you can wait for the bounce or wait for the break. Let's just say we break lower. Okay, and come in short. It's really through 128.70 in my view. And then look for a move to the downside and have your stop back clear of those tails there. Okay, these two over here. If we bounce up to 130, you want to be behind 131. Okay, where are we going to go to? Well, you've got this tail here from the previous decline. If you want to be a bit more conservative, you go for the bodies. So 125.50. So you've got, near enough a 3 to 1, just under, down to that level. However, I personally feel this one, I'm not doing the weekly charts in this video, but 125.50, I think we should get down to there. But longer term, 115, 110, if you look at the weekly chart, I'm just so bearish of the euro long term. haven't covered the fundamentals, obviously, in this video, but you can look at my Euro USD video. Yeah, the fundamentals for Eurozone, in my view, are terrible. They're getting better for the yen. I think that bounce that we've just seen, just natural in a bigger trend, and we'll go down until, yeah, when you're following long-term trends. I'm just going to make this point. You've got to give it a little bit of leeway. You don't bring your stop too close, because you'll never stay with the big trend. Okay, because obviously it can be quite erratic, okay, on a daily basis, and this is quite a wild pair. So obviously we'll give a little bit back to stop, and we'll still come out with a really good profit back in at the same level. We're now going to see if we go down through that 20 next week, and hopefully carry on to the downside. Right, let's go to the last pair, which is going to be CHFJPY. Right, on the last chart, which is CHFJPY. Now, in terms of this pair, COT, it's neutral. Okay, if we're below 2, we don't consider it significant at all. Divergence is 1.2. Specs have got a few longs. The commercials don't really have anything. Okay, but that's giving us clues to where this chart might go. Just explain very quickly. I'm just going to go through how we've been playing this setup, then draw my levels. Now, down here, commercials buy heavily, specs sell. It's a +10 divergence. Up she goes. This level here. Commercials exit their longs, specs hold their shorts. And yeah, when we wanted to enter this 118 level here is a weekly resistance level. And we thought it would come back. It did. We managed to get in at 117.40. I thought we'd get a decent trend to the downside. Broke the 20. Went down. Kept going reversal there. We've stopped ourselves out just behind the 113 level. So basically this one near enough 400 pips for us. So a great run down. And what we've noticed is, despite the big run down, commercials just aren't buying. Okay, so that is going to keep us basically with our view that the CHF is going to continue down. And that goes with our fundamental analysis as well, and sentiment. Now, it's a bit similar in terms of EURJPY, but not so aggressive. You get above the 20, pokes there, poke there. Just low volatility now. From our point of view, as being bears, we see that now as the key resistance level. So 114. Just draw my lining. So you can see where we got up, held it, and then we broke it here with a poke. I just see this level holding on a closed basis. Now, where would you want to come in? I think there's no real upside momentum. There's your 20-day moving average. A couple of bodies there. You can give it a bit more confirmation if you want. But I like to be kind of aggressive with my entry, so I just want to come through, clear of that level. Then we'll be back short again. Now, where do we think we're going? Down to there. Sorry if I draw my line straight. So just down below the 109 level. So yeah, it's decent risk to reward trade, because if you come in through here, just going to risk it back here. Okay, well clear of the 114 level. You've got about 3 and a bit to 1 in terms of risk to reward. Our own view on this trade is longer term. It's probably going down to 102. Okay. Now, in terms of this setup, obviously, I know I keep saying it, but obviously we'll monitor things as they go and keep in mind the COT. I've used the COT slightly different here, obviously, but yeah, we'll just monitor things, see how they go. My own view is if we do get a break to the downside, then we should continue lower. If we broke above 114, I'll just sell her back through the number with a stop behind 115. For us, this is a really decent trade. Hoping we're going to get more mileage out of it. We shall see. Right, that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.